The power of XDC as extremely low-cost chain and highly open from a strategic perspective and the mindset of the co-founders is to be able to act as this glue amongst chains and to bring the value on different chains, in particular end-to-end transactions. Also in trade finance, which is a major focus of XDC, we manage the whole chain with alternative lenders, asset managers, but we need the liquidity from stablecoin issuers. So working with institutions like Circle, Ripple, and many other stablecoin issuers is strategic.
So welcome back to another XDC MENA podcast where we talk about blockchain, innovation, projects, technology, and of course about the XDC Network. I am Rebecah Dausen, XDC Network's lead of ecosystem development and also your host. In this episode, we will be discussing the intersection of blockchain and trade finance with one of the leading voices in the space, Andre Casterman. With 2 decades of experience in traditional finance and also a distinguished career at Swift, get ready for a fascinating conversation about tokenization, trade finance, and of course, institutional adoption on the XDC network. So Andre, welcome to the podcast.
Thank you, Rebecca. Great to be here.
So yes, Andre, first question. Can you tell us more about yourself and your Web3 journey from a traditional finance guy getting curious about blockchain and even XDC network?
My journey started when I was 13. I was attracted by technology through one of the most advanced calculators in the early 80s, which was the HP 41. And I thought it was fascinating, first of all, because it was advertised as the one calculator that the astronauts were using. And in my view, it was indeed the most advanced, and it was programmable with the reverse Polish notation, which is very special in the HP world. So I started programming on this as a teenager, and then moved on to programming on regular computers. But before MS-DOS was available and Microsoft emerged, so different languages. Then I studied economics because I thought actually what next to tech and programming, I'm interested or attracted by the more economic activity. And being a Belgian citizen, I studied economics in Belgium, and then also added an IT degree because I wanted to apply as a programmer again. So combining economics and IT has always been my foundation, I would say. Joined Swift in '91. Stayed 7 years in IT before Swift launched a major innovation program to take advantage of the internet technologies or internet protocol, which we called the TCP/IP back then, and driving a number of innovations, which I was part of from the early start in '98. So I moved to indeed innovation and stayed until for 24 years in total until 2015, before indeed embarking on my own advisory and investments in fintechs to indeed work on the most advanced innovations focused on transaction banking, payments, trade finance, and a bit of asset management. We will come back to that.
Right. So it's a very vast career from a programmer and then studying economics. And then, but do you consider yourself as a banker?
No, as I like to say, I've never been a banker, but I've always worked through Swift for all the banks on the planet, because indeed all our services were always available to the whole community. Swift being a cooperative company owned by banks, serving mainly the banks, but also some non-bank institutions and corporates. So indeed, it's important. I've never worked for one particular bank, but I've always enjoyed working for as many banks as possible in one go.
That is great. With your experience, we've seen a lot of geopolitical tensions and, of course, the tariff wars, especially with this latest with President Trump's administration. How do you think this global dynamics change the international trade flows, and specifically with the trade finance sector?
Yeah, it's another major hit on international trade following COVID, I would say. I won't come back to the consequences of indeed the decisions, but one major outcome for businesses and small and medium-sized enterprises, for SMEs for sure, is indeed the disruption of their supply chains. Because indeed, when you have tariffs impacting you, or where you have geopolitical events preventing you from doing business with particular countries, you have to shift your partners to other countries. You have to source your materials from other countries, and you have to become agile, basically, which is something that we got as a lesson during COVID. COVID showed that relying on paper in trade finance or in trade as well was not sustainable, because the paper couldn't reach you. So the move from paper to electronic means became strategic, more than just an efficiency opportunistic play. So indeed, the lesson here following the Trump administration decisions is that businesses need to become much more agile. And the smaller you are as a business, the more agility you require, because you don't have the capacity to plan this change in the next 3 years. You have to plan it in the next 3 weeks, or maybe in the next 3 months. So agility is what is required following those two major economic shifts, I would say, COVID and now the tariffs. And technology is a way to become much more agile. I guess we'll come back to that.
Yes, right. Yes, supply chain is very fragmented, and again, SMEs are so widely affected with the tariff war that the POTUS have done. So yes, given these challenges that we have mentioned, how do you think blockchain can help the issues?
The blockchain is a way basically to enable the information to be much more reliable. Blockchain, I would position it as a way to share information and to enable indeed new entrants in trade finance as well, to rely on new technologies, enabling them to extend liquidity to new parties. For instance, blockchain, I would position it as one of the evolutions of open banking practices. If we look back 50 years, the banks created the MT standards on SWIFT in the 70s, then the ISO 20022. We launched at SWIFT in the late 90s. And then regulators embraced APIs for open banking regulations in the 21st century at the very beginning. And blockchains is yet an evolution of those open banking options for parties to exchange information. With an API, you exchange one-to-one. But with a blockchain, you exchange one-to-many, or even many-to-many. And it's a really a way to exchange information. And from there, it's a foundation, it's a piece of infrastructure. And from there are multiple use cases that can be derived across any industry, basically. And that's the beauty of the blockchain, is not dedicated to the one or the other industry. We can use it across multiple industries. A bit like we have been using the cloud across multiple industries. And I guess we'll talk about a few use cases.
Rightfully said, yes, blockchain is interoperable, right? And again, it's transparent and immutable. So yeah, given these challenges that we already addressed, I think we already pointed out that SMEs suffers the most with the inefficiencies and the fragmentation of liquidity. So how do you think tokenized trade finance instruments help to ease the resilience to the economy?
They have been hit not only by COVID and by the Trump administration tariffs, but also by bank de-risking. Bank de-risking is a consequence of the 2008 financial crisis and the way the banks have to manage their balance sheet. I won't go into the details, but it's really about balance sheet management, which has led most of the banks to focus on less risky clients and more profitable clients. And it's good practice for any business to focus on core clients and profitable clients. No issue with that. But as a consequence, smaller businesses have been de-risked by banks, so they got less funding, working capital lending from their traditional banking partners, which they use for payments, cash management, and FX activities. And as a consequence, those businesses had to turn to non-bank lenders. And we know traditionally, we know about the factoring companies, but more and more those factoring companies have been absorbed by banks. So more and more we have seen new entrants in trade finance, new lenders, new funds aiming to lend also to businesses, and new asset managers extending liquidity by usually buying assets from those SMEs, but with the objective to fund the working capital needs. Blockchain as a new piece of technology since a number of years has been a way for some of those new entrants to rely on digital technologies for anchoring contracts. For instance, if you want to protect your lending activity with a promissory note or a bill of exchange or a bill of lading as collateral, you can use blockchain to digitize this contract, because a promissory note, a bill of exchange, is a contract. I commit to reimburse you, I commit to pay, and that can be used as a collateral when financing receivables. For new entrants starting from scratch, of course, they will use as many technologies as possible rather than paper. Also for the reasons of agility that we mentioned. And this is a great use case where blockchain makes a huge difference. And it's a very simple one because we're going to use blockchain for those instruments as a way to record transactions. We're not going to move money yet, because that's another level of regulatory compliance and complexity. We're just going to record the contracts and track the transactions to make sure they are authenticated, verifiable, and have not been tampered with. So that's the first track I would suggest.
Right. Blockchain is not just a transfer of value, but also exchanging information. As you said, if we tokenize this bill of lading and whatnot, it can be used for as a collateral, right? Okay, so yeah, can you tell us about the stablecoins? Because definitely we need banking partners for on-ramping and off-ramping. So can you share any exciting partnership with XDC Network?
We have heard about central bank digital currencies and more than 40, maybe even more central banks working on this. So it has been promising, but has not progressed as fast as stablecoins. Stablecoins is a tokenized representation of the dollars or euros in bank accounts. There are different variants, of course, but the key is that the regulators now have been very active on this in Europe, in the US, and also in the UAE. So more and more independent parties such as Ripple, Circle, Tether are major players in non-bank stablecoins, I would say, but I would expect also a huge number of stablecoins to be issued by banks themselves, top banks. And some US banks have already indeed announced they're waiting for regulation to clarify how and when they could be going this way. In the UAE, we just have indeed the first Abu Dhabi bank announced dirham-based stablecoin. So it's another proof point that the traditional finance world, together with the regulators, otherwise they wouldn't do it, are recognizing the power of blockchain and different use cases as relevant and strategic for their own value propositions towards their own clients. So the train has really left the station on this use case. The challenge for tech providers like us is to being able to interoperate all of those parties, because you have new entrants in blockchain, stablecoins, trade finance. You have the incumbents like the top banks, and all those parties need to operate. I predict that we're going to build new networks of correspondents. You know, SWIFT is managing the correspondent banking network since 50 years, and it has worked brilliantly and will continue to work brilliantly for moving money across bank accounts. The stablecoins will demonstrate that how big players, including Circle, Ripple, and others, with the top banks and local banks, will build a new form of correspondent network. I wouldn't call correspondent banking network, but correspondents that are working together to move money on the blockchain across wallets. Because we're not talking about bank accounts there, we're talking wallets. Now, you mentioned indeed off-ramping and on-ramping, and that's a key function because it's a way to bridge the correspondent banking world with bank accounts with the crypto wallet accounts on the blockchain. So to move money from the one to the other, the fiat world, as we call it, to the crypto world, we need those regulated institutions that are usually broker-dealers, but could be others that are basically moving the money from across the two spaces. Distribution of stablecoins will be essential, which is why I'm very excited to see new players like ARP Digital, a regulated broker-dealer in Bahrain, entering that space and working also with XDC Network to enable this interoperability and this new type of network.
Exactly. Yes, XDC Network loves to work with regulated institutions, regulated partners, as you said. And yeah, big names that you mentioned, Circle, Tether, Ripple. Again, this is interoperability. It doesn't really necessarily mean that we compete to each other. In fact, we work together to a better future, right? So yes, Andre, we do have traditional finances who are looking at blockchain first time. What advice can you give it to them? Why should they use blockchain or even look at blockchain?
Yeah, I would take it from the use case perspective. Look at what kind of value propositions your clients are looking for or that you want indeed to deploy, even if your clients are not asking specifically for this. But there are use cases where indeed the value is obvious. Moving money faster is obvious. Moving money cheaper at cross-border level is an obvious use case. That's where tokenization can help on the blockchain, of obviously using regulated stablecoins. You can also look at more basic use cases by digitizing bills of lading, bills of exchange, promissory notes, which require also the use of blockchain for verifying those instruments and for interoperability. And that is of a lesser complexity from a regulatory perspective because you're not moving money. You're just anchoring your exchange information, you're anchoring on the blockchain a contract, a commitment to pay, not a movement of money. And then you can use that as collateral for financing receivables. You can also use the blockchain to create investment products, new investment products that are cheaper to access, where the barrier to entry is much lower, and distributing, for instance, illiquid asset classes such as trade finance, but real estate could be one, to the mass market. But the whole perspective, and maybe one would say this has been done before with funds. Yes, but to enter a particular fund, the cost level was so high that you had to put maybe 10 or 20,000 euro or dollars as an initial investment, whereas with the blockchain those costs will decrease drastically, and you can lower the barrier to entry, the initial amount to invest, and you can reach many more investors, potential investors, in particular on the retail side. So using blockchain for illiquid asset classes, expanding indeed the market for specific asset classes, democratizing access to investment is what we expect the blockchain to also deliver to those who want to work on the asset management side.
So yes, Andre, as the trade finance landscape is changing, what do you think? I mean, is XDC the right fit for it? I mean, does XDC has a strong foundation for it?
Yeah, the way I see the role for XDC is really about this interoperability across multiple parties. If you look at the Web 2 environment today on websites are working together. We don't see it necessarily, but when you click on one piece of hyperlink text on one site, it will go to another site and maybe to another intermediary site to track, to charge, to measure activity. And in the Web3 environment, powered by blockchains, the blockchains will interoperate as well. Based on their specialized market or specialization, could be a target market like XDC, focusing on enterprise level applications, payments, trade finance, but also retail applications. Other chains focusing more on payments exclusively, or in particular particularly on asset management or logistics or gaming. But all of those chains will interoperate. That's where what I mean here in the Web3, like websites interoperate in Web2. So the power of XDC as extremely low cost chain and highly open from a strategic perspective, and the mindset of the co-founders is to be able to act as this glue uh, amongst chains and to bring the value on different chains, in particular end-to-end transactions. Also in trade finance, which is a major focus of XDC, we manage the whole chain with alternative lenders, asset managers, but we need the liquidity from stablecoin issuers. So working with institutions like Circle, Ripple, and many other stablecoin issuers is strategic for XDC Network, because you can't do it everything by yourself. You need to interoperate and work with partners. So stablecoin issuers is a major track, but also, as I said earlier, there will be this distribution network with off-ramp and on-ramping partners like regulated broker-dealers. And that's where also XDC wants to work with as many of them. Could be Securitized in the US or ARP Digital in Bahrain and the UAE. There will be many in the future. So that's really the key role for XDCs, whilst focusing in specifically on transaction banking, payments and trade finance. There is a need to bring indeed the value from partners onto the transactions operated on XDC. And this is where the interoperability across chains is now really making sense. Whereas in the past, we could have thought one chain will compete with another chain, but this perspective is the one before 2020. Now those chains are interoperating because of their level of specialization and the fact they want to enter in particular ecosystems. So we're talking to a lot the major stablecoin issuers to bring indeed their liquidity in the trade finance space for transactions operated on the XDC network, as an example.
Right. XDC Network is truly a right fit, not just with its technology infrastructure, but also XDC Network is one of the few networks that is military compliant and also embedded with the ISO 222 messaging. So yes, Andre, any final message to the community members out there?
I think the blockchain has to be seen as a technology innovation bringing cryptography to a new level. We have been using cryptography for electronic signatures, and everyone understands, of course, the electronic signature use case and the benefit. You don't have to print, sign, wet ink, and scan, and you can just click and you're done. Cryptography is brought to a new level. The blockchain, for me, will be embedded in so many use cases, we will not notice it anymore. It's a bit like the cloud. We don't notice what is on cloud, what is not on cloud, and so on. For me, it's an upgrade of the internet. That's how I put it to family and friends who are not in the tech space. It's an upgrade of internet. The internet has been used to exchange information, but the money stays in bank accounts. Now the money can be fully electronic on your Android phone or iPhone. You can have a wallet with money fully digitized, and you're the custodian, you're the holder. And that's equivalent, this wallet on the phone is equivalent to a bank account. But suddenly you are the custodian, not the bank being the custodian. That's how you have to look at it if, in case you're still scared about the crypto space, which has a specific past, because indeed the crypto can be associated with financial crime. The second thing is, which is most exciting, is the alignment of the regulators and the TradFi. We need the TradFi players. And when I see the amount of work, including in particular from the US, but also UK, EU, and the UAE, that the regulators, the focus the regulators are putting on aligning their national laws to enable this industry to thrive, this has become a bit of a geopolitical topic as well, and a fight to attract talent and to grow that industry on their soil. And the UAE in particular is very ambitious, as it has been on a number of topics. But the US is now quickly catching up since a few months. I don't need to tell you why. But so very excited about the alignment of the traditional world, which is key. You can't fight the traditional world. You have to work with them, and that will basically scale the use of blockchain. We saw it on CoinMarketCap that we are now at about $3,000 billion in the crypto space. My goal is for us as a community, crypto community, to bring that to 10 as quickly as possible. And this is now achievable thanks to the big boys, the big players entering that space. So this alignment of crypto with TradFi, with regulators, is the most promising track that I can witness over the last few months. And this will benefit everyone indeed, because the technology will be accepted not only by those traditional finance players, but also by the new entrants who are serving those SMEs and extending liquidity to the SMEs in the trade finance space. So we are indeed bridging traditional finance with the many new entrants. And this is also what I'm doing. With ITFA, we have the community of traditional finance players, banks, credit insurers, some major tech providers. And with the TFD initiative, I'm focusing on the new entrants, alternative lenders, asset managers in trade, which are new entrants in trade, actually, even if some are very big asset managers, tech providers, and also crypto players, service providers like XDC Network. So bringing the two together to bridge the crypto focused players with the traditional finance is what we will achieve by combining the TFD initiative with the ITFA community. So bridging the two communities together is what I'm aiming to achieve. So TFD initiative is the way to enter the space as a new entrant and to discover who to partner with. We're going soon to add also many corporates. We already have a few, like Done Partners, but more and more corporates will be joining because they're looking for new options to get liquidity in support of their working capital.
Totally agree with you. Blockchain has really come a long way. Imagine 10 or 15 years ago, this was not possible, right? But now, banking people, regulators are embracing crypto or blockchain itself, the technology itself. So yes, Andre, thank you so much for being part of the podcast. Thank you for sharing your valuable insights about tokenization, trade finance, and institutional adoption.
Thank you, Rebecca. Pleasure.
All of the links of ITFA and TFDI will be placed under the video description. So if you want to know more about XDC Network, please go to www.zinfin.org or participate in our discussion by going to www.xdc.dev. So I hope everyone enjoyed this podcast episode, and keep learning, keep exploring until the next episode.